It is the one commodity that affects everyone, and the price is still extremely low. Oil will dictate the fortunes of so many economies in 2016, especially the big producers who are already making cutbacks. How low will oil go, and could the price slide actually be stopped if politics could be put aside? This is Inside Story. Hello, I'm Kamahl Santamaria. For years now, Gulf economies have been sustained by a steady flow of black gold. But falling oil prices may be sending some of them into deficit for the first time in a decade in some cases. On Monday, we saw Saudi Arabia's budget numbers. They weren't great, not for this year or for 2016. The finance minister said the budget deficit for 2015 was $98 billion, which shows us how the fall in oil prices is already biting. And for 2016, the deficit is projected to stand at around $87 billion, not much better. It's an indication the Saudis and probably everyone else thinks oil prices will only recover moderately next year. King Salman said he plans economic reforms. Nothing specific, but there has been talk about Gulf countries looking to taxation in the next few years to make good on some of the shortfall. But really, oil will continue to be the big economic driver, which is why the price is so important. Let's talk prices, actually. The average price of Brent crude is on track to be the lowest in 14 years. It hit a low of just above $35 last week, and some analysts predict it could go as low as $20 before stabilizing somewhere above $50 in the new year. That's putting massive pressure on members of the oil-producing bloc OPEC. They'll have lost around $500 billion in revenue this year, according to the International Energy Agency, while an estimated $1.3 trillion has been wiped off the market value of oil companies this year. So let's talk oil and oil prices with our guests. Here in the studio with me is Abdullah Baabood, who's the director of the Gulf Study Centre at Qatar University. Welcome. And joining us is in Athens, we've got John Sfakianakis, economist and former advisor to the Saudi government. He's now the Middle East director at the Ashmore Group. And joining us via Skype from Abu Dhabi is Jaafar Altaie. He's an energy economist, founder and managing director of the Manaar Energy Group. Gentlemen, lovely to have you with us on Inside Story. John Sfakianakis, I will start with you, seeing as you are our resident expert on Saudi Arabia. The numbers which have come through, I've seen people talking and saying, well, it's not as bad as we thought, but I think the story is that it is bad. It's not great. And there doesn't seem to be a sign of too much improvement in the next year because of these oil prices.
Well, it's not as bad as, let's say, the IMF has made it look like back in 2015 when they were forecasting the deficit for Saudi Arabia. So the IMF was saying Saudi will have a deficit of 21-22% in terms of GDP. They ended up with 13%. It's better. But of course, with oil at $35, $40, $30 a barrel, it's not good for everybody. And you need to do economic reforms. In 2016, oil is not going to recover much. We could see oil treading sideways, meaning that it could be in the 30s and the 40s. So you will end up with another deficit, as you said. And that means that they need to find alternative sources of revenue.
Well, this is what King Salman said. I'm quoting here, the budget is the beginning of a phase where there will be several sources of income. That's about as vague as we can get at this point. Do you have any thoughts on what he's saying?
Well, absolutely. I think that they'll have to think of new sources of revenue. And this is, as you said, by taxing companies or individuals, or having a sales tax, which has to be GCC-wide sales tax, a VAE tax in other words, or try to diversify. Of course, it's easier said than done. An important number for the 2015 and 2016 budget is that Saudi Arabia has been diversifying its revenue sources. So back in 2013, about 90% of its total revenue came from oil. In 2015, we were told 73% of its total revenue came from oil. So that is a positive thing. The other positive thing is that the government continues to spend. Market was expecting that Saudi Arabia is going to contract in terms of its spending. In 2016, it's saying that it's going to keep on spending, not as much as before. They will have a deficit, but still it's positive.
Abdullah, let me bring you into the conversation. We've talked about, well, John was talking about there about the types of reforms which might come through. Now, it is said that it is actually the King Salman's son, Mohammed bin Salman, who is the one really pushing these sorts of reforms. Do you think he can get consensus for this type of thing? Do you think there is consensus to push through? Because this will be a big change for the kingdom.
I think this is a big challenge for the whole region, not just for the kingdom, with the falling oil prices and the fact that they have been very slow on reform. They were comforted for a very long time by the increase in the oil prices. They didn't have to face the reality and reform and diversify. Of course, they have always said that they will diversify their income, and they have tried here and there, but they really did not put their heart into it. And one could ask, why should they when you have this benefit of bounty of oil?
This is the thing, as long as it's there,
exactly.
Why would you look elsewhere, sort of?
And now they're confronted with the reality that the oil prices are down and the expectations that they are not going to recover very soon. It might be a very long recovery, if at all, because there are very huge fundamental changes in the market price, in the oil price. It's not necessarily another cyclical correction. This is much more fundamental because of alternative energy, because of shale gas, because of changes in the demand as well. So you have supply-demand fundamentals are not meeting each other, and there's more supply than demand. So now is the time for the Gulf states, if it's not too late, to actually start doing these reforms. But these reforms are not going to be easy. They're going to be very, very difficult. They're going to be a lot of resentment because there is a lot of vested interest in these states. And they are going to be costly in terms of political, economic and social issues.
Well, seeing as we're talking about change, Jaafar Altaie in Abu Dhabi, let me bring you in, because I did note today that the UAE has dropped petrol prices, gasoline prices, by 6%. Now, that's not a huge drop, but the significance is that it is doing it. It's going away from the subsidised fuel, the standardised prices, and it's going to a more market-driven fuel price. Now, obviously, people will like that because fuel prices will go down, but there could be pain ahead if they go back up, if the UAE decides to subsidise, take more subsidies away.
I think the UAE was more proactive about the issue of reforms and about the issue of diversifying the economy even before we had the drop in oil price. And out of the whole Gulf, I would argue that it's probably one of the leading proactive countries that's taking the right precautions to broaden its economy and is best equipped for that. Certainly there will be pain if the petrol prices go back up again. But I think the confidence in the UAE is very much founded in the fundamentals of the market in the UAE and that it will correct itself. Of course, that's not to say this is a sure guarantee against further economic instability. And in fact, also the UAE is affected by other Gulf states and by the region and its economic development as a whole.
Tell me more about what diversifying was done in the UAE, because obviously Abu Dhabi, Dubai, all the states there are really built on oil as well, but the oil reserves are not as much there as they are in Saudi Arabia, for example. So what's the UAE done?
I think a number of initiatives are materializing. First of all, I mean, Dubai itself, it's a brand. The Dubai it's become a regional brand, and definitely it's a global brand. For investment, for financial services, real estate, medical tourism, all kinds, renewable energy as well, all kinds of economic activity were initiated in Dubai. And Abu Dhabi is taking on its own economic identity also in a non-oil role in the areas of renewable energy and maybe energy-related technology. You could argue the Abu Dhabi direction is a slightly more pragmatic direction that builds on its existing dominance in the oil and gas space. But we shouldn't be under any illusion. Definitely, the UAE still fundamentally depends on oil and gas. And like my previous colleagues mentioned, it's a costly diversification. It's not a game. It's a costly initiative. And it would even, I would argue, call on the social development. Society itself has to embrace austerity. greater austerity, and they have to embrace the reality that you have to invest and tighten belts to develop real capacities. And I think the UAE has made some gains in that respect.
Okay, so here's the thing. All three of you gentlemen have pointed out that, yes, there needs to be diversification, but we can't kid ourselves either, because oil will still be the backbone of all of this. John Sfakianakis in Athens, let me put this to you. If Saudi Arabia is putting out a budget today which shows a deficit and shows a continued deficit next year, and it's having to adjust because of these lower revenues from oil, its revenues could be higher if it would cut production. Now, you and I have talked about this previously on Al Jazeera, the fact that the Saudis didn't want to cut production and the price stays low. And I still fundamentally think I don't quite get that, because surely they would want the price to go up.
It could be. It could be that they decide in 2016 that output is going to be restrained, and unilaterally Saudi might decide to lower output. But the chances of that, again, maybe are negligible, given that, again, oil is at 35 and it's not at 15. Not that I'm predicting that oil is going to go to 15, but again, I really do not foresee unilateral action at OPEC, although a lot of pundits have said that it has to be done in order to control, if at all.
So maybe you can explain. Sorry, let me jump in really quick, John. Maybe you can explain to our viewers why. We'll put it this way: the common logic is that if you cut production, then the price would go up. Why does Saudi Arabia particularly, and the stronger OPEC nations, not want to do this? The issue of competition.
Again, there are two factors. One is that you do not know, even if they cut output, that prices are going to go up. Number two, and this is something that they did in the 1980s, they lowered oil production, then you had a huge tumbling effect. Now it has been a tumbling effect, but it's a gradual tumbling effect. And also, as your guest said, and I agree completely, that the energy market has changed fundamentally. We're seeing a disciplinary change in the way energy markets are functioning today, far more than at any time in the last 100 years. Not only there is shale gas, shale oil, but there is the demand-supply factor. Demand has not been going up. Emerging markets are not crazily consuming energy, and the supply has been plentiful, and that's pushing and driving prices lower.
Abdullah, is this as much about the likes of Saudi Arabia, the strong oil countries who want to show the power that they have within something like OPEC and show that they are still the influencers there? Because again, and John and I have talked about this before, the players like, say, Venezuela, who want the oil production to be cut so the price will go up, but it is the stronger players like Saudi Arabia who don't, and they sort of flex their muscles and show we're still the strongest ones here.
I think there is a battle of wills here within OPEC. Saudi Arabia is, of course, very concerned about its market share. They've done so in the past, where they've acted as a swing producers and reduced their output when it's needed to correct the market and to correct the equation between supply and demand. But in many cases, this has turned against them, where they have lost their market share and they've lost their clients. This time, they want to make sure that even at the cost of lower oil prices, that their market share does not go on. Now, this is a very dangerous strategy because you're hurting other members in the OPEC. You're hurting other members within the Gulf states. Some members of the Gulf states have already started raising the red flag, saying that their economies are going to be badly affected. And you know, we are in a region where the economies are fully dependent on oil, despite what we see about, or we talk about diversification. I think we should also not be fooled by the economic figures, because some of this diversification are actually partly based on oil.
Right.
So oil is still the linchpin of these economies. And if something is going to happen to this oil, there is a very fundamental challenge to these countries and to the stability of the region.
Jaafar, do you agree with that there is such a threat from other oil sources? Like if countries in this part of the world decide to cut their production, that, for example, the United States will take that share away from them?
Partially. I think we've agreed that there has been a paradigm shift, fundamental change in the oil sector, but we should qualify that. The timing of that change is still uncertain. We don't know really the picture of demand. Demand could actually be underestimated. We're hearing reports now that actually global demand could be higher in 2016. We have prospects of things like a warm winter, which affects demand. This could be negated. This could be reversed. If we got a stronger picture of global demand, if things like geopolitical shock, attacks on Iraqi or Iranian oil production, or any kind of political shock in the region that affects oil production happens, immediately the price shoots back up. So many caveats say that while the fundamentals of oil are changing, we don't know the timing in which those fundamentals kick in. Now, on the subject of the US shale gas, if you talk to the producers in Eagle Ford and Marcellus and the other areas in the US, you'll see that they're struggling, really, and only it's the survival of the fittest, only because the US is such a productive economy that they're able to survive at these oil prices. But if the oil prices persistently go down, you could see that US shale production goes out of the game, or at least declines. So in the short term, we can't rely on this fundamental change as seeping through. I agree wholeheartedly that there has been a fundamental change, but there simply is as many downward pressures as there is upward pressures on the price. Therefore, we have to watch very closely the short-term reaction of the wealthiest states in the region, those being the Gulf states, which will give us a clearer sense of direction on the real priorities and the real capabilities of the region to deal with this situation.
How closely, because you mentioned this, and I'll ask this to you, Jaafar, and then to you, Abdullah, how closely should we watch the Iranian oil? Because this is, again, something else we've discussed, the fact that sanctions will eventually be lifted, or they should be lifted. There's all this Iranian oil waiting to come out onto the market. Again, the theory is that that could push the price down again. Is it, do you think, significant enough to make a real impact?
I think so, but again, I think definitely the prospect of more Iranian oil is a downward pressure on prices. But number one, Iran, we don't know their capabilities right now to flood the market, so to speak. They're not like Saudi Arabia. Iran is not a swing producer that can just flood the market with oil tomorrow. They have technical constraints, number one. Number two, they need foreign investment in their oil industry, and at a price of $30, and if even the price goes below to $20, this is a problem for Iran, because they will have problem attracting the investment they need to develop the oil sector. So Iranian constraints, Iranian supply constraint in itself could be a correcting factor on the price. But all signs right now is that Iran is poised to bring to the market 500,000 barrels additional daily production. And don't forget Iraqi production, which is now bordering on the 4 million barrels per day level. So both of these producers definitely put downward pressure on the price, and the jury is that downward pressure is more significant than upward pressure.
Exactly. See, I would argue that Iran actually could flood, well, not flood the market, but they could act pretty quickly, Abdullah, because the talk was how they've got all this oil basically sitting in tankers waiting to be put on the market. And I guess because of Iran's isolation, they'll take pretty much any price. They just want to get it moving and get that part of the economy moving again.
Absolutely. But I just want to mention one extra point which Jaafar had mentioned, which is the fact that oil is, and I think John had also alluded to this, that oil is a strategic commodity. Yeah. And it could be affected by any other political action in the region. But what makes this episode very different from the previous ones is the fact there are so many crises now in the region. You just look around the whole region and there are crises everywhere surrounding the Gulf states, and yet the oil prices are going down. And I think this is a very strong message that we have to learn, that this episode is going to be different. It's much more fundamental, and it requires a different challenge. But to go back to your question, I think Iran economy is in tatters at the moment, and it needs a lot of investment. And of course, they need a lot of income. And I would expect that they would try and revamp their oil technology and their oil wells to be able to produce more. And I think this is also part of the plan why Saudi Arabia is trying to keep that market share. I think the more oil that is put in the market, it will dampen the oil market. It's going to put downward pressure on that. And I agree that Iraq is also going to be doing the same thing. So all the pointers are pointing to more supply, and I'm not too sure about the demand.
Yeah.
But also, if you add to that other countries in the region, Libya is also another country that could increase production. So I think we are looking at more supply in the market, and the demand is not sure, and there are a lot of alternatives and technology that is changing, affecting the whole fundamentals of the oil price.
John, Abdullah made a great point there, didn't he? The fact that there is so much conflict going on in the region, and any time in the past we've seen major conflict, we've been ready for that spike in oil prices, the spike at the petrol pump and all that, and it's just so different this time around.
That's right. I mean, the so-called geopolitical premium was so important when we were looking at the price of oil, and it seems today that it has gone out the window, and there is no more premium for what's happening in the region. And the region, I agree completely, has changed in fundamental ways. The Middle East is no longer the same as it was 5 or 3 years ago or 10 years ago. So despite all the havoc and uncertainty going on, oil is going down. So that's telling of the paradigm shift that we are seeing in the way oil is being priced globally. And I think that's very important, not just Iran, Iraq. I think there is a bit of exaggeration when it comes to Iranian claims that they're going to export in a few months 1 million barrels, and their capacity is just going to increase. Nobody really has a clue what's happening to the Iranian oil industry. Iraq is fundamentally split in different countries, and in Libya you have many Libyas. So, but yet again, Venezuela is waiting around the corner. The sub-Saharan African countries are waiting, Nigeria and others, and of course the energy market has changed because there is renewables, and technology is going to be the major push forward for change in the next 20 years. So the region has to fundamentally shape up, and it's no longer the same as it used to be in the 80s when we had plentiful of oil revenues coming in, and then we just had a party. Nowadays we have to really fundamentally reform. And as I said, it's easier said than done because nobody around the world has fundamentally diversified away from oil. If you compare Saudi with the UAE has a greater capacity because of purchasing power. There are wealthier people in the UAE, more citizens are in Saudi with less purchasing power, so it's more difficult, more challenging for them to see an increase in their daily utility bill.
Gentlemen, we're starting to run down the clock here, so I want to get a few final thoughts from you, and I'm going to put you on the spot. It's crystal ball time. I know none of us like doing any predicting about the oil price. However, it has gone down and down and down. Jaafar, let me come to you first. Do you think we've seen the bottom yet?
I started my career, when I started it was around, the price reached around $10 a barrel. This was in the late 90s. I don't think necessarily we're heading for that, but I think we could be seeing a touchdown to 20. Right. It will recover thereafter. But definitely, I don't think for this foreseeable future, for 2016, we have seen the bottom. But I do think we know the ceiling, and I think the ceiling is maybe in the region of $60 if normal market circumstances prevail, barring a shock, of course. If we have a shock politically, no, I think it goes up. I'm a bit more skeptical about the premium.
Let me jump in, Jaafar. I am running out of time now. Abdullah, last thought from you. Where's the bottom?
Difficult to say, but I just want to say something here. The Stone Age did not end because of we ran out of stones, and I think the oil age is not going to run because we're running out of oil. Oil is no longer going to be the strategic commodity that it used to play. The market has fundamentally changed. It's a buyer's market nowadays. There are a lot of alternatives. There is a lot of competition. There are a lot of resources, and technology is changing this. Oil plays a very important part now only in one sector, and that's transport sector, and that is also changing. And I think this is where the fundamentals are going to change. A new paradigm shift is on the way.
Abdullah, Baabood, thank you so much for your thoughts, and as well to John Sfakianakis in Athens and Jaafar Altaie in Abu Dhabi. Thank you, gentlemen. And thank you for joining us for Inside Story. You can leave your comments on our program page at aljazeera.com. You can post your views to facebook.com/AJ Inside Story. You can tweet us as well at AJ Inside Story. I'm Kamahl Santamaria from the whole team. Thanks for joining us. We'll see you again soon.